How is the Iran war affecting the housing market? That's what we're going to cover in this monthly market report. This is for you if you are a real estate agent, a financial advisor, or an attorney interested in market data to help you advise a client, or perhaps you are that potential buyer or seller looking for some direction. I'm Paulo Rodriguez. I've been a mortgage professional since 2005, and here is the market data that you need to make an informed buying or selling decision or help your clients do the same. There's quite a bit going on. Certainly, the war in Iran and everything happening has caused some disruption in mortgage rates. At the time I'm recording this, it's mid-April and ceasefire talks have fallen apart. The chief economist at First American came out and said, geopolitical developments can certainly create short-term volatility. Energy price spikes can briefly push yields and mortgage rates higher as investors hedge against the risk of near-term inflation. And here is the effect that has had on rates. This chart is from Freddie Mac, and you can see the jump happening over on the right. So here's what you need to understand about the markets. Markets are forward-looking. They like certainty. But right now, there's uncertainty with oil prices and inflation due to what's going on in Iran. That doesn't help the rate environment, and that's the reason rates are up. Mortgage rates don't move in isolation. When global events inject uncertainty in the financial markets, and as long as that uncertainty remains elevated, rate swings may continue to happen. The best advice we can give somebody right now is something that I have said many times in the past, ad nauseum. It's not about timing the market. It's about the time that you are in the market when it comes to real estate. The money is made over time, not with perfect timing. Many people are wondering, well, should I buy now? Rates are too high. What are we going to do? Mortgage News Daily said this. Even if the war were to end today, there's been sufficient disruption to infrastructure and big enough initial spikes in energy prices to create what economists would refer to as second round effects. In simpler terms, this means that inflation expectations and interest rates will not immediately return to February's levels simply because the war is over. So the point is that we're not going to get lower rates right away when this Middle East situation is hopefully sorted out. We can only hope that it all blows over quickly. If you're a buyer, this may not be good news for your rate, but it's great news for the price you will pay for a house because other buyers are spooked. And that means less competition for you. The weight of a buying decision should be placed on the quality of the property and how it fulfills the buyer's needs, not what mortgage rate they can get. Marry the house, date the rate, as they say. Switching gears, here is an interesting trend. You might be hearing that a bunch of listings are coming to market. You might wonder what that will do to prices. But Redfin said not all sellers are willing to negotiate. Many opted to delist and try again later instead of cutting their price, especially if moving wasn't urgent or if they needed to get a certain price to break even after buying at the peak of the pandemic market. Delistings hit a record high of over 112,000 in December. Now, if you graph that, this is what it looks like. This is delistings going all the way back to 2021. You can see they are clearly on the rise and peaked in December. I think that has a lot to do with sellers that were disconnected from the market. Sellers that were asking for a price that the market was not willing to give and ultimately pulled their listing. Now, this is where it gets interesting. Redfin said nearly 45,000 homes that were delisted last year were relisted in January of this year, the highest January figure in records dating back to 2016. Take a look at this slide, also from Redfin. More people putting their homes back on the market this year than we've seen in the last 10 years. So not all sellers are reducing their prices and negotiating. Some are simply pulling their homes off the market if they do not get the price they want. Redfin noted that delistings have been elevated and many of those homes are now being relisted again. In other words, some sellers tested the market, didn't like the feedback they got, took the home off, and then came back later for another try. That tells you something important. Inventory is rising, but not because homeowners are desperate, not because people are running for the exits. Quite the opposite. A lot of these sellers do not need to sell. They are not distressed. They are simply unwilling to accept less than what they believe their property is worth. That is a very different dynamic than what we saw in 2008, and that matters. That's a wrap for the May market report. I appreciate you listening in. Forward, subscribe, share. I'll be back next month, but before you go, if you are looking to purchase or refinance or know someone that is and would like a no-cost consultation with me personally, feel free to reach out and I'd be happy to analyze if your debt is structured in the most optimal way or if there is room for improvement. Thanks for watching. Bye for now.